Good afternoon. Welcome to Optimum Live, episode 2, but it is the first time we're going live. My name is Chris Dawes from Visual PR. We're the production crew of these kind of live events that we're able to do. And it is live, so please ask any questions as we go through this. We're going on a deep dive of yesterday's autumn statement. Ask questions, share the video, do the likes, the loves, the whatever. You can be watching it on Facebook or YouTube, the Optimum channels. Last time we did episode 1 as live. So we just hit record and went like we're going to do now, but we didn't go live. And it's thanks to the first person I'm going to bring out, and that is the Optimum Accounts Director, Mike Blaken. Hi, Mike.
Hi, Chris. How you doing?
Yeah, good. Thank you, my friend. Yeah, it was down to you, wasn't it, that this is the first live one that we've done?
Yeah, that's it. Yeah, I wanted a trial run first time round.
And it went really well, didn't it? We were here in my office / studio, and we had the camera set up on us, and we had a good old natter.
Yeah, that was it. It was good. It was enjoyable actually. Going through it all.
Yeah, what was it? The about the VAT threshold, wasn't it?
Yeah, that's it. The pain of getting VAT registered nowadays.
Yeah, and the time schedule. So if you've missed it, go back and catch episode 1. It's well worth catching up on it. And great to see that we've got the ability for people to comment. Already we've got Tracy Alexander. Hi, Tracy. Get those comments in, but possibly more of them will be once we get into the questions. The good news for you, Mike, is you're not on your own this time from Optimum.
That's it, yeah. Someone else is coming on board now as well.
We have. She's nervously smiling in the background because I can see in my green room underneath. But I'm going to bring up Head of Accounts and Assurance, Hannah Matthews. Hi, Hannah.
Hi, Chris.
See, you've been unnecessarily nervous about this, but I don't bite, and Mike only nibbles.
Do you know, it was all about the hair frizz, really. Just wanted to make sure I was coming across okay on camera.
I know the feeling. Yeah.
I mean, I wasn't going to comment.
Yeah. At least you still got enough to do something with yours, Mike. So that's don't rub it in.
Again, no comment.
No, exactly. It's too easy. Listen, guys, we had the autumn statement yesterday from the government, and first comment, and remember, the beauty is that I'm coming from a very naive perspective on this. Business owner that gets guided by you. Obviously, I'm a customer of Optimum as well. And as you know, I need a lot of hand-holding at the best of times. There was a lot of promise, a lot of bluster going into this one. And before we get into the details, didn't really seem to deliver masses.
No, there was a lot of talk that there was going to be big tax cuts and everything. They're trying to get a bit of hype behind it, but as we predicted a little bit at the start, they couldn't really cut anything because they need to fill the budget and they need to fill the hole. So they've tried to be quite subtle in what they're doing, a couple of tax cuts, but actually the rest of it is still business plan ahead as they were the last couple of years.
Yeah, because I mean, I was thinking that when we were leading into it is that they had to give an awful lot away with the pandemic, and that's all well and good, but that's like a bucket with a hole in the bottom then, isn't it, for a good while? It sort of felt to me, I'm going to be cynical for a second, and we can move on from my cynical comment if better, but it felt like a move towards a general election and hope that they make people feel that they've done some nice things to stay on board.
Yeah, definitely a political one in my view. Trying to get some votes in next year.
Hannah, I saw you were nodding.
Yeah, so it was always going to be. I wasn't overwhelmed by it, and I didn't particularly have any high hopes for anything incredibly exciting. Clear up some administration, in respect of some new reforms that have come out, which we pretty much got. But yeah, other than that, not huge impacts on people, which you could look at in two ways. Is that really, really good, or is it not enough? That's the question for a lot of people right now.
It is a tricky one. I mean, I was going to raise a question, and I don't know whether there is an answer to this one. Not overwhelmed, but did it go as low as underwhelmed, or does it just literally sort of somewhere in the middle of just like, bleh?
I don't know about Michael's appetite here. Sorry to interrupt. But for me, I was quite. I feel like it was something that's quite stable. There hasn't been anything ridiculous proposed. There's not humongous changes coming in. So I think a bit of stability is what we want. Certainly, what we want for the market and people. So yeah, that's my position on it.
Yeah, and I think they had a lot when it was around COVID and lockdowns and stuff. There was a lot of big, huge scale changes, more because they needed to and everything like that. Whereas I think now, if you look at it, everyone's going into it thinking, what are the big changes going to be? But actually, they can't. Because we're trying to compare it to a period when it was lockdown, when there was huge changes and the furlough coming in, the bounce back loans and all those kind of changes to help businesses. Well, those aren't going to come out now. So they're always going to be minor tweaks and adjustments on that plan. And like Hannah said, trying to keep it stable.
Agreed. And before we move on to the finer details and sort of pick our way through some of the key elements, is there anything that jumps out at you as being bad?
As a business owner, there was always a slight hope, this tiny little hope that they were going to reduce corporation tax rates, but they didn't. So that was a bit that I suppose on a personal level was hoping they would change, just so they can help the businesses, like the smaller businesses, actually get more money in the pots to grow. But they continued with the heavy percentage coming through.
Hannah, anything that stood out to you as being particularly bad?
I think I'd have to agree with Michael there. Yeah, it was. We were hopeful for something, but it's not to be. Certainly not this time around. It may change in spring or autumn, whenever you can argue that an election may happen. But for me as well, I think it's increasing the national minimum wage. It is a good thing, but I just want to make sure that some of the small business owners that we look after, that they're not taking these cost burdens on and just absorbing them. They need to look at their margins and make sure that they are passing that on where appropriate to the customer.
Especially when, and I don't really know who of you two is going to comment on this, and it's a very slight tangent, is that from my own personal experience as I'm trying to grow visual PR, is that I reached out for some funding just to try and sort of not as in grants, but to take on a loan. And they claim that they're helping businesses grow, helping businesses employ. Went through a broker to try and get it sorted, and initially it came back with a no based on ridiculous comments. And he said that's the problem. He said now they're claiming that they're lending, but they're really not. It's incredibly hard to get money lent to help you grow, to help you recruit.
Yeah, and it's more expensive now as well. With interest rates up, it's expensive to do it. So if you do get through the criteria of the 2,000 questions and get approved for some loans, you're going to be paying a higher rate than what you may have been 18 months ago. So then you got to look at it and go, okay, yeah, I got the chance for growth, but also it's blooming expensive now. Yeah. So you've really got there's less. It's more risk because you have to make it succeed.
Yeah, exactly right.
Sorry, the other limitation I think is that, I think that where we've come in terms of technology and AI is fantastic, but sometimes on these loan applications, it all very much goes through a computer, and there are rigid parameters and responses, and then it spits out, an answer. Whereas sometimes, especially when you're within such a dynamic environment as is a small business, it's really beneficial to just speak to a real person who can get to grips and understand what you were trying to achieve, how you're going to achieve it, and then make an assessment based on, you as an individual, your business, the where we are in the economic environment, and to drive it forward like that. And it's having that accessibility to underwriters and to people like that.
Agreed. And in case anybody's wondering why I went off in that tangent, it was based on the fact that if we're not necessarily getting the breaks and statements like this, and we're struggling to get loans, then it can be a challenge. Not impossible. It's not doom and gloom. Definitely not, as I am finding out. But it's just sort of like a tightrope at times. But let's get down into some of the nitty gritty of the different bits and pieces, and we're going to go through. Now, I'm potentially going to be doing this in the order of the document that we have created, but we may go off in some spikes. Don't forget. Ask questions, add your own input, any thoughts that you've got or impacts that you may be feeling from it as well in your comments. If you're watching on Facebook, you'll be able to put the comment down there and it'll come through and it'll show me that it's yourself asking. And on YouTube, you've got the chat function. If you enable that, you'll be able to ask questions. But let's catch up with a few of the specifics. You still love that, Mike, don't you? You love that.
Yeah.
I'm confused. I was going, what's happening?
Hey, it's, we got to go high tech. Right. First things first is that a headline comment from you, Mike, for example, was that the Chancellor was highlighting the number of people not going back to work as an issue that is impacting growth of economy. And so that sort of seemed to put the Chancellor in particular directions.
Yeah, absolutely. I think, and he mentioned it, that there was like a million vacant positions with businesses. So it's not the fact that businesses aren't growing. They obviously got opportunities to grow if they got that many positions. So he looked at it as a way to get people to get off the sofa in certain circumstances, to get back to work and make it appealing to get back to work. And so there was it pushed the national minimum wage up by £1.02, and that's all great, because that does incentivize people. It gets those people where they're having to struggle with the electricity costs, mortgage rates, rent, or whatever it is, to make sure that they're keeping up with that. So that's good. The knock-on effect of that is always, well, that's got to come from somewhere. So just getting the employer to go, okay, so everyone gets an extra £1 an hour more. Well, those that work on minimum wage, there's a real pressure on the companies for how much they got to spend. Yeah. And I always remember a bakery client I had back at my previous firm, that just bringing in the auto enrollment pensions put pressure on the 3% that was then, or 1 and 2 at the very, very start. That put pressure on. So then you're putting on nearly 10% on someone on the wage bill. And as Hannah said at the start, as an introduction, that's got to filter all the way down from the top. So people who are then going and doing, in this a bakery, got to do the shopping, they got to expect the price to go up. But does it? That's the thing.
And that includes, I noticed that from, obviously you guys always work hard and get a document out as well. The apprentice rate has gone up as well, hasn't it? Yeah, quite a jump as well, 20%, over 20%.
Yeah.
Oh yeah, 21.2%. Yeah, absolutely. So that's up to £6.40.
Yeah.
Now, which is a rise of £1.12. They go very specific here, don't they? And I guess I get the reasoning, and that's why it's such always a dichotomy looking at these things, really, isn't it? Is that it needed to be done for us as individuals, but for the businesses, it's then a challenge for it as well. I noticed that on that same line, and forgive me and go back to this if I've moved on too quickly from it, but that the self-employed national insurance is being reduced.
Yeah, so there's two rates. Self-employed individuals pay two types of national insurance. There's one, class 4, which is, in all intensive purposes, the same as an employee. They pay national insurance on the pay slip and bits, and it's that sort of same level there. But that was 9%. It's now dropped to 8%. So there's a couple hundred. An average Joe will pay a couple £100 less in national insurance per year for that reduction. So for an employee, it's 12. So there is a different rate, but it's coming down again. But then the other one is the class 2. So class 2 is there. It was always been a weekly amount. People back in the day used to pay it as a full weekly payment on a direct debit. It never was part of the tax return. They changed it. So it was always like £2-3 a week. So it's about £175 a year. But that got you your entitlement to a state pension stamp and other state-related benefits. It kind of showed you were working. As an employee, you get that through paying your national insurance through your salary or how much you earn. Right? That's kind of the tick in the box there. So those are the two, but they've decided to just scrap entirely the class 2 national insurance and just take that out of the equation.
Oh wow!
I'm glad you cleared up what class 2 was for, because I've always sat there thinking this is a really silly tiny tax, and I don't fully understand what it was used for. It's never been on my top of my list to go and find out. So
the main of it is your state pension stamps for self-employed. So you can pay your income tax, your class 4 national insurance, which is that 8-9% I mentioned just now. But then it's this other one that actually ticks that box for whether you get a qualifying year for state pension.
So I think off the back of this, what's worth noting is if you're a self-employed individual and you have a loss-making entity, you can still make voluntary contributions in order to get that stamp for your pension. So that's something that's really useful for individuals to do, whether you're in PAYE, self-employed. If you have a government gateway, pop in, log on and have a look at your state pension record and have a look at what your national insurance record, have a look if you've got any gaps, because then you could make a voluntary payment and you could make sure that you're getting those stamps for, as we call them, for each year.
That's it. Yeah. Your personal tax account. Yeah. It's really important now that HMRC are driving people there. And it takes, if you haven't set it up, it takes 5-10 minutes to set up your passport and driver's license as ID in the system, and you're in. And it's really helpful exactly for that. So where we've picked up businesses over the years, previous firms haven't necessarily done the payroll submissions correctly on directors and stuff. And by having a personal tax account, will show you quite quickly where there's gaps and if something's not working, and it's easier to fix it at the time rather than going, oh yeah, 15 years ago it didn't work properly, and now I'm going to lose out on state pension. So it definitely is something for everyone to do, is to jump on and set up your personal tax account.
Yeah, especially if you're like a university student, for example, you spent 3 years at uni and you had a little, a little job ticking in the background. Sometimes that doesn't register quite right in the system. So you actually need to prove that you're in full-time education for those years, and then you have an exemption. It's just making sure the record's tidy.
And I've made a note that I need to go and check that myself, actually. Funnily enough.
That's it. Yeah, that's it. Just go and do it. Do some admin.
And of course, you guys also, for like using myself as an example, is that officially classed as self-employed because I'm the owner of the business, and you guys manage all that behind the scenes as well, don't you? So that you've got to update your systems.
Yeah, and you raise an important point. I want to say that. So there's 2 types of self-employed. There's self-employed what a client calls themselves, and there's self-employed what the taxman and accountant will call. So you got self-employed people like yourself say, I'm working for myself, so I'm self-employed. Okay, but there's 2 types, whether you're operating through a limited company or not. Because when you're operating through a limited company, you're actually employed, and then an investor and an owner of a business that gets paid dividends. Whereas self-employed with these types of national insurance are those who are a sole trader, not operating through a limited company, and it's those rates that apply.
Got you. That makes sense.
Without realising, you raised an important point there.
That's what I'm here for, mate. Pull the pin, throw the grenade in. That's all I do. I just let the magic happen in front of me. But it's like, I know that I have situations where I don't know where. If it's like car finance or something like that, is that I have to tick the self-employed box because they don't class me as employed on things like that. And it's like really weird.
Well, I think they still haven't, the systems still don't get that, because I was speaking to a mortgage guy last week for my client who's in your circumstance, limited company, and they tick the box to be employed because you're employed. So yeah. I don't know, that's not my world, but there's certainly some ambiguity there.
It does blow my head. So minimum wage increasing, national insurance being reduced. Is there anything else to say on those 2 points before we move on to the next one?
No, I don't. I haven't got anything else.
That's fine. I don't know, don't forget. So I've got to check these things. Slopey shoulders. Right. In terms of things affecting businesses, so let's move on to that. Now, you put a comment here that you're going to have to expand on for me. Full expensing doesn't really affect the average company, just the biggest ones. Discuss.
So when you buy equipment, let's say an engineering firm goes and buys a new brake press, big sort of 300,000, 400,000, 500,000 piece of machinery. Okay, so that doesn't come as an expense in your profit and loss as a line entry like you would with bank charges, accountancy fees, like mobile phone costs, because it's an item that lasts longer than a year. So they sit it up here on the shelf, and in the accounts, it's called a fixed asset. Right, and you get a thing called depreciation, which is like accountancy jiggery pokery with what the value writes down. Okay,
is that how you learned it at uni?
Exactly.
I see them going like this.
Jiggery pokery.
And then the tax man goes, well, I don't agree with that jiggery pokery. We call something over here capital allowances. Okay, and so you buy a piece of equipment, you get capital allowances, and that's a write down of the value. Now, every limited company pretty much gets £1 million a year to spend on these kit items, plant machinery, to get capital allowances. So essentially, it acts in your view, exactly the same as paying 10 quid for a coffee. Right? It goes an expense, reduce your profit, saves you tax. Okay, so that's fine. But what they're saying, and it was a thing they brought out in the spring budget as well, spring update, is that 95% of businesses are covered by this £1 million, and it's all good and everything. But what they're doing, they made a big thing out of, if you spend more than that, you can generally get it written off as well in full. So you speed up the tax allowances. So they made a big thing of it in spring, and he mentioned it again this time. But essentially, that's affecting your big multinational kind of huge companies that spend a lot on plant machinery. We looked through ours, and we got some people who spend a lot on kit, lorries and sort of machines like that. And in a year, they're not getting over £1 million really. So for them, it's business as usual. For every average Joe company, yeah, they're business as usual with that on the capital allowances.
So that's kind of a headline that doesn't affect the majority of us. When I've lost track what the stats are. SMEs make up something like, 70-odd% of this country or something like that. Yeah. It doesn't really affect them. Okay. Equally, we've got business. This is actually the other way.
I've got a point to just add.
Please do.
On the capital allowances. So just whilst it doesn't affect small businesses, the kind of it's the bigger boys that this full expensing affects. What this fiscal policy aims to do, capital allowances, AIAs overall, is the government are trying to incentivize businesses to invest. That's what a lot of the underlying themes of the last however many budgets have gone through. So what they want you to do is go out and spend money on assets, because if you do that, assets make you money, and therefore your business grows, and therefore the economy grows. So whilst it looks like no change here, I think the underlying theme is keep going out and investing. If you have the cash, if the cash is well spent doing that, keep investing, because there is really good tax relief for it. So keep growing. Don't be put off by, oh well, no, nothing has changed. No, it is a very good relief still in place. So yeah, keep going out, keep buying assets, keep earning money and growing.
I feel like I've been told off there as well on that one.
I'm a mum now. I'm getting really good at it.
I know. I'm super. Yes. I'm just going to invest now. Right now, I'm going to go and do it. Get out of trouble.
Hey, you've done it. So you've got this new systems and bits like that. So you are doing it. It's just different scale.
And in fact, I've spent 4 figures recently, good 4 figures on new tech as well that helps me to do it on site and things like that. And there's more investment that's going to come over the coming 12 months without question. I just have to accept that I don't get any full expensing or anything like that. But hey, I shall be speaking to you guys about how those things can be written off or helpfully invested in. So That's helpful, to be honest with you. Okay, thank you for that, Hannah, and apologies that I moved on too quickly. But I was going to then turn it to the other angle, is that business rate increases, but that's only affecting the biggest buildings.
Yeah, so you've got business rates charged on whatever the kind of the government, the council say the rateable value is. So it's not necessarily what rent you pay, it's what they deem. It's pretty close. So up to £51,000 rateable value. So sort of decent sized buildings, you're paying 49 pence per pound of this rateable value in business rates. So for example, a £49,000 rentable value pays about 24 grand in business rates. No relief, that's what it is. There's kind of relief because it's a smaller percentage, 49 pence per pound. The bigger businesses are paying a lot more. I don't actually have the rate off the top of my head, but it's sort of 55 or so pence. But then the bit that they've tackled is the small businesses. So someone with a rateable value less than 12 grand generally doesn't pay any rates, because it's covered by the small business rates relief. So your small shops, your small offices and bits like that are all covered. And then you start paying it in full at 15. So between 12 and 15, there's a little sliding scale of relief. And then above 15, you start paying at 49 pence per pound. But what they continue to keep in is the 75% reduction on retail, leisure, hospitality. So your pubs and bars and cafes, they're all being protected by this bigger relief. So they brought it in last year, I think it was. And so for them, they're still getting this relief, which is good for them. It's, again, where the pressure of wages is going up, because they're typically a minimum wage sort of environment. They are still continuing to get the relief that a couple of years ago, or like before lockdown, let's say, they weren't getting the relief. So hopefully that helps the pubs get through this winter, and the restaurants through this winter period.
Was that something that is staying for now, or was there no sort of discussion of if or when that could be removed?
It's for now. They won't ever put it in for permanent because they can't go back.
I saw the cynical look on your face then, Hannah.
Yeah, no, the answer is we just don't know. I think hospitality, leisure and retail have been hit so hard by the pandemic, by our empty high streets. It's a really difficult space to navigate. So far as what we know so far is this relief is in place till 24, 25. I think it would be wise if you... I say to be careful and budget, etc. But how do you need crystal ball to do that? Just be prudent, I would say, in there. Yeah, as we're kind of approaching the end of 24, 25.
Start budgeting for it not being there at some point in the future, type thing.
Yeah, I mean things like price, understanding where your price points are, and kind of the appetite of your customers. No pun intended. If you've got a cafe or whatever. But yeah, it's a space that's going to be difficult to navigate, and I think it will just take some time. Just be mindful that that's not unlikely for it to be there forever.
And on the other, the sort of like the couple point on this, the business rates thing, you were talking about investing and growing and all of those sorts of things, and I'm sort of in that interesting space where I know that my next move is not just the increase in rent or property cost, but I'm suddenly going to be introducing business rates again, and that's quite a challenge, isn't it?
Yeah, it's making you work out what that jump is that needs to be. We talked about a jump similar with the VAT bit. Is there's a point here where there's a bit of a cliff edge up or down, and what you've got to grow to. And you can't just do that little bit more, because if you got a rent and you go to, say, a 16 grand place instead of a 10, you've got another sort of eight grand, nearly sort of 7 grand cost with that little increase. So there are these little cliff edges that you need to be aware of before you jump into them. And it's just more not to be scared of doing them, because every growth you've got to go through them, but just knowing what they are just helps.
Absolutely.
Agreed. Yeah. Only because I heard you mention it. I'm going to do this one out of place, but I noticed that they still haven't increased the 85 grand VAT threshold, which I know came up in our first episode, Mike, didn't it? About the fact that
so hidden stealth, like the stealth taxes as they're being called, and it got highlighted after Jeremy stood up and done his bit about the stealth taxes. They haven't increased personal allowances. They haven't increased the basic rate band. And knock on of that is they haven't increased the VAT threshold. So as things get more expensive, more people are getting VAT registered, more people are paying higher rate tax, more people are paying 20% tax where they're over the personal allowance. So it's by not increasing it, surprising what they'll be gathering up from that.
I think fiscal drag will become a swear word very similar to Brexit, but we'll see.
Fiscal drag.
Yeah.
I'm gonna note that one down. I like that one. Okay, that's not what Michael does on the weekends, is it?
It's a football round.
But I know we touched on it, Mike, in the fact that when we were doing the VAT threshold thing, is that the cost of things, the cost of your things to other people, it's all rising, and yet the VAT threshold, it's not increasing. So do I take it from the way you said that he was picked up on it, that it was he shirked it, there was no addressing that it's going to be looked at in the near future, it was just completely ignored?
Yep.
Fair enough. That's the good enough answer.
They're not changing. That's what they've decided, and that's how they're filling the gap of. So instead of what you would have expected maybe on the last one to have put tax rates up to cover the whole, they're just not increasing the threshold. So you naturally, those people getting up near those thresholds are paying more tax than they would have been the year before because of that. So as a value, they're paying more, not necessarily of a percentage.
No, I understand. So that's the stealth tax, not increasing personal allowance or basic rate band. And what was this dividend allowance falling?
So each individual used to have, when they brought in more of a tax rather than notional tax, kind of a fake tax, that's old news, so we won't get into that. But it was first you could get dividends of £5,000 a year, you wouldn't pay tax on. Then they dropped it to 2,000. The current tax year stood in 23-24 is 1,000. Next year is £500. So the idea being that those people with the small little investments, little shares in Shell or Tesco or whatever the brand, like the big PLCRs, so they get a few little £100 a year. They're covered by the free bit, and then everyone else pays tax on it. So. So I think, like for yourself, if you had a couple of grand of dividends, you wouldn't have had tax. Now, a couple of grand of dividends, you got sort of some small tax on the £1,500 now that wasn't taxable a couple of years ago. So it's just little bits, little tweaks to the system. So, but your percentage charge is still the same, just the free bit's gone.
This is all optics, really. This is how I'm seeing it. Instead of saying, "Oh, we're going to increase the tax rate to this," and we're going to actually, it's all optics. But I mean, I don't know how you feel about it, Michael. But for me, I think this one does kind of maybe leaves a sour taste in your mouth for small business owners, for SMEs who really are contributing significantly to the economy and coming out of a really bad period.
Yeah, and from a selfish point of view, yeah, absolutely, it affects me, but it does. It's exactly that. It's going, you work really hard with your business. So he talked about self-employed working really hard and being the backbone of the economy, and then going, company tax, corporation tax going up, and dividend taxes can't technically going up as well, although it's because of the tax-free amounts coming down.
Yeah, it does feel a bit harsh, that one. I must be honest. It's rather frustrating because that was always a way that it was worked out, and it makes it worthwhile going through the pressures of running your own business, for crying out loud. But hey ho, we'll get that. I think, like you calling it optics, Hannah, is that I use a phrase in my training that I offer as well that is dead cow or beef steak. Both exactly the same thing, but one sounds a damn sight tastier than the other. And there's like a few things in here that are just sort of being wrapped up in a way that when you start analysing, it's like, yeah, that's not very good. That's not very fair. But I can't say that we're surprised about things like that, really. So apologies to vegetarians out there, by the way, but you get the idea. It doesn't work with the carrot because that's on the TV advert, so I'm not allowed to do that now. R&D, research and development, continue to be tackled as an area of extreme non-compliance. What on earth does that mean, Mike?
R&D's always been something that over the years, you put a claim in. It was kind of Central Europe money, EU money backed, and it was you put a claim in for R&D. So anything you're making that could be seen as new and innovative, you got an extra relief and you get a load of tax back for your company. Lovely. And you were getting companies coming along, knocking on the door saying, I could get you loads of tax back. They take a big chunk of it, and that was fine. But really, those businesses weren't doing proper R&D that most people would associate. They weren't doing something new to market. It was just or something that's not your typical skill set. So an engineer just doing the same, making something, would have got a claim in the old days, whereas now it's UK money essentially coming out of the budget. They want actually people to work for it and actually be new ideas, something that you would expect something new to be. So like either running a new machine. So we got running a new machine that cuts like material completely different to what was before. So that just verges into it. There could be making new software that's not out. It's not an off the shelf. It's not done. It's changing. It's improving the economy and driving things forward. So it's still there. The rates are still there, but they're just tackling down on what you need to do to be able to get in front of it. And they're not being shy of coming back onto claims that they previously paid out and going, I know you've had that money and we gave you 30, 40 grand a year ago or 18 months ago, but actually we want it back now. Really? We don't believe we should have it. And you say that, imagine dropping yourself some R&D money in, money comes in, lovely, I'll invest it in that. Oh, now we want it back. Okay, where's that going?
Where's it coming from?
For those of you listening who don't know what, because we've just used the acronym R&D, R&D is research and development. And the point of it is that you get tax relief for investing in research and development. And essentially, to summarize it very briefly, just Michael said, you have a problem. Okay, what is the problem? And then you have done some sort of innovation in order to address that problem. So this is part of the government's policy in trying to catalyze innovation. So where you have competition, you have innovation, and that should help us and bring our economy up. So by giving people essentially a tax credit, a lot of the time this does look like a pot of cash to give businesses for investment in R&D. And Michael then highlighted a lot of the problems that have come along with this in terms of reporting it, submitting it, getting the claims paid out. There's been fraudulent claims, and it's just, it's become quite the process.
Yeah, for me, that sounds like trying to close the loophole somewhat, although I'm quite surprised that they're going backwards after the horse has bolted. I mean, that's worrying. I mean, do you know whether they're contestable if they're going back to people? That can you still kind of go, whoa, no, and you can help prove it? Or is that in the detail?
Yeah, it's not a done deal. You just got to go back and potentially provide more information. A lot of them have been done by specialist R&D firms, so that project to work sits with them, and they need to go and do that to justify the work they've done and obviously the fee they took.
No, that makes sense. Yeah, okay, I can understand that one. But it still sits there. There is still that R&D relief for people that are doing that kind of stuff.
Yeah, and it's still worthwhile doing, because a lot of firms need the expectation that they might get that just to help cover the risk of trying these new projects, because none of these projects that they start out with and think about are guaranteed to succeed and generate money. But you need to have failures to get the ones that work, and so that's like the incentive.
I think R&D can look anything like example Michael gave in respect of an engineering firm. Cutting stuff, or it could be, I had a gentleman who made vegan chocolate and submitted an R&D claim successfully. So it really is a broad spectrum. And it's something that you should, hopefully you're talking to your accountant anyway. Hopefully we are your accountants. But you talk to your accountant, because talk to us about what you're doing, what your plans are, because you don't necessarily need to know that this relief exists. But by you talking to us and us hearing about your business and your future plans, we can pick stuff out like this and say, hey, look, this may be available for you.
And I think that's a key one that is probably sounds better coming from me rather than from you guys saying it about yourselves, is that's one of the key things about Optimum for me, is that you can go and speak to them as a business owner and kind of go, I know what I'm trying to do, but I don't know how to do it and how I can get help to do it. And you guys really love to sort of peel the covers off and have a look and sort of advise on what's possible. And, you know, we've touched on things like R&D. We've touched on, you know, capital equipment and things like that, investing in capital, understanding what we can do in terms of properties. You know, you guys have got your head around those sorts of things. And it is always good to go to you and ask for advice. You'll never sort of poo-poo someone away because they're asking for something that you kind of go, surely you should know. I mean, you made a great comment, Mike, in episode 1, is that you don't get a builder in to build an extension on your house and then build it yourself. You know, it's
this brick here, this brick there.
Yeah, exactly. That's what you guys are.
No, I didn't get the builder in, I just built it myself.
But that's what you guys are there for in reality, is to help guide us through all these different bits and pieces.
Yeah, look, I think 75% of our job is understanding a client's wants and needs, and then the 25% then is doing the rest of what we do. Michael is excellent at going out to a client and understanding what they need. So you know, you may approach us for a call, you may approach Mike for a quote, right, this is what I want. And often Michael will say, okay, this is what you want, here's the quote, this is what you need. And then that gets a dialogue going.
And I get that. And I know, for example, I had a conversation recently with a business that I'll leave unnamed for obvious reasons, but that there was a discussion about they needed new tech, new hardware, and quite a lot of it, and high spec. But they have got such a lot of retainer business that there was relief that they're able to get, or good, not necessarily relief, sorry, good rates for the finance for these things, because they're able to sit there and go, that's retainer business that's on our books there. Therefore, we'll finance this new tech, and it's been able to look outside the box rather than, because I would jump online and do a search for finance or something to that and get these comparable rates back, and it's like, actually there's other ways to do these things, so it's always worth speaking to you guys.
Yeah, so we just want to help. We got all the information. We said it in the last episode, and that we've got the information, we've got the knowledge, we've got the experience and stuff, and we've probably got the little black book of contacts that might help as well. And we want to help. We want to see you grow. One, because we enjoy the journey, but also from an accountancy point of view, the stronger the client, the better they grow, the better client we've got, and that's great. And it's much more fun to be on that journey than just going, here's your end of year accounts, right? There's your accounts. There's your tax bill. There's my bill, right? See you next year. No one's enjoying that experience. No one at all. So it makes it much more interesting.
And I can speak from having gone through that experience myself, is seeing the difference. So definitely that. Hannah, did you have anything else that came out in the autumn statement that jumps out at you that you want to touch on, or have we covered it all?
I think we covered a lot of it. There was some clarity on MTD for IPSA, so that's for self-employed, sole traders, landlords, etc. But we'll be reaching out to our clients directly on that front, and we'll be issuing some literature as well, which will be on our Facebook. Maybe that's something we could discuss in another episode when we get nearer to the time.
So that's Making Tax Digital, yeah?
Yes, that's the one.
Fine. Okay. Yeah, because I must be honest and say that was great when I went that route, that everything's done on my finance package. It's brilliant and just gets submitted. It actually feels too easy when I submit my VAT returns and things like that. I'm like, surely it's more than that work involved, but it's not. So
I think some people are quite, oh gosh, I don't want to put it all on a software. That's going to be such a headache. But with the software that's around these days and the apps on your phones, I think it's all really accessible and really slick.
It is, and as if by magic, is for anybody who wants, hang on, let me just save it, to find out more, is that you want a copy of the PDF. So that is, and I've got it open here, so about the autumn statement, very detailed PDF put together by the team. Drop an email to marketing@optps. That's Optimum Professional Services, optps.co.uk, and you can get that PDF sent through to you. And it is a really good detailed 14 pages, he says, as he's looking up at it here, and it gives you a really good breakdown. We've tried to sort of delve in and make it conversational, which is the idea of these shows, of course. But you can have that as a piece. So drop a line to marketing@optps. If you wanted to get hold of either of the two you see in front of you, you've got Michael's is mblaiken@optps.co.uk, and Hannah is hmatthews@optps.co.uk. So get hold of those as well. Whether it's a customer, already an Optimum customer, and you want to find out some more and you need some assistance, even if you're just not sure, drop them a line and find out some more information. If you're not a client, then of course do it, and I'd be happy to field questions as someone who's gone from elsewhere to a client a long time ago now, to be fair, isn't it? I've been with you guys for jeepers 7 years, I don't know, easily.
So I think you were part of the furniture before I moved across to Swindon, so yeah.
I was with the legendary Rich. I was involved with him there. Okay, well, I mean, I think that covers everything for us at the moment. And either of you got anything else to add?
No, I'm good.
No, all good.
Fantastic. Well, what I shall do is I'll play us out. You two hang fire in the background for after I go off air. But for everybody else that's watching, or if you're watching back the replay, thank you so much. If you're not watching it live, obviously still put the questions there, but that involves someone else going back and seeing extra comments, and that might get missed. So drop a line to the emails if you've got any more questions to come out. Keep an eye. This is a monthly show that's going to be happening now, Optimum Live, and we'll be picking up different subjects as we go along. We'll have a variety of different guests probably on some of them as well. Drop us a line if there's something that you really want us to cover with relevant experts as well on the shows. If there's anything that you think would be good, let us know. But stay watching, get them ready. They'll be out monthly. And I told you, Hannah, there was nothing to be worried about, was there?
No, absolutely not. I really enjoyed it, actually.
Fantastic. Well, listen, thanks for watching, everyone. And we'll be back next month for episode 3 of Optimum Live. Cheers all.
Cheers.